Every single day, we're online, we're clicking, we're shopping, and we're buying stuff without even thinking twice about it. But behind that super simple click, there's this whole complex system working away, and sometimes there's a hidden risk that actually affects all of us. So let's pull back the curtain and find out who this invisible player is in your online shopping.
It seems pretty straightforward, doesn't it? You pay the store gets your money, end of story. But is that really what's happening? When you send your payment out into the digital world, it actually goes on a journey you probably weren't expecting. So who's the secret middleman handling your cash?
Well, that middleman has a name: a third-party payment processor. They're a totally crucial, but almost always invisible, part of the e-commerce engine that powers our entire online world. Let's take a closer look at what that really means.
So here's the key thing to get. A TPP is basically a client of a bank, but its business is to provide payment services to other businesses. You can think of them as a financial go-between. They're collecting and bundling up transactions for tons of different online stores, all at once. And what's really wild is just how much these processors have changed over time. Back in the day, they mostly worked with regular brick-and-mortar stores right here in the US. But once the internet took off, their business just exploded, and they went global. Now, they handle payments for pretty much everything, from your favorite little online shop to huge international travel sites and even internet gaming. Now, this global growth, which has been amazing for online shopping, has also created a really dangerous information gap for banks. It's like a blind spot in the system. Let's break down exactly how that happens, and more importantly, why it's a risk for the entire financial network.
We all pretty much assume our money goes on a straight line, right? From us, directly to the store we're buying from. Simple, clean, direct. But that's not quite the whole picture.
In reality, the store you just paid, they don't usually process that payment all by themselves. Nope, they use a third-party payment processor, that TPP, to handle it for them, along with thousands of other payments from all their other customers.
So then, this TPP takes all those individual payments, bundles them all together into one giant batch, and presents that to their bank. So you see, the bank isn't dealing with each individual store. It's just dealing with one massive client, the TPP itself.
And right there, that's the heart of the problem. The bank knows the TPP really well, but it has no direct relationship with the hundreds or maybe even thousands of different stores that TPP is working for. And this makes it incredibly hard for the bank to know whose money it's actually processing at the end of the day.
And you can probably guess what's coming next. This exact blind spot is a golden opportunity for criminals. It creates these little shadows in the financial system where illegal stuff, like fraud and money laundering, can hide in plain sight. Let's dig into how they exploit this weakness. Okay, so some types of businesses just naturally come with a higher risk for things like consumer fraud. And these are often the very businesses that lean heavily on TPPs. We're talking industries like telemarketing, online gambling, and other web-based merchants that are just tougher to vet. So criminals have a playbook for taking advantage of this system. They can hide what they're doing by spreading their business across different banks. They can launder dirty money by mixing it into a huge stream of clean transactions. And maybe the sneakiest of all, they can mask their fraud.
This first move is super simple, but it's really effective. If a sketchy TPP opens accounts at several different banks, no single bank ever gets to see the full suspicious picture of what they're up to. It's like they're intentionally showing each bank just one little piece of a much bigger and much more worrying puzzle.
And this table right here is the perfect example of how they mask fraud. So look, a criminal merchant might have a massive 15% rate of unauthorized transactions. On its own, that's a gigantic red flag that any bank would spot immediately. But when you mix those bad transactions into the TPP's enormous total volume, that scary 15% gets diluted all the way down to a perfectly normal-looking 0.5%. The fraud just disappears into the noise.
So how in the world do you fight back against a threat you can't even see? Well, financial institutions can't just throw up their hands. They have to become financial detectives, right? They use all these specialized tools and techniques to shine a bright light into these dark corners.
And this right here is the absolute key to the whole thing. The investigators have learned that it's not about the size of the transaction. $1 million wire transfer isn't always the smoking gun. Sometimes the most dangerous activity is hidden in a huge flurry of tiny, seemingly meaningless payments. It's all about the pattern, not the amount.
So what exactly are they hunting for? They're looking for patterns. Things like a sudden spike in a ton of small transactions, or weird customer behavior that doesn't make sense, or international payments going to a business that's supposed to be just a local shop. Any little thing that breaks from the normal pattern can be a sign that something's really wrong. To fight this, banks use a kind of three-pronged defense. It all starts with something called customer due diligence, or CDD. That's just the basic process of making sure a client is who they say they are. For clients that seem riskier, they kick it up a notch with enhanced due diligence, or EDD, which is a much deeper dive. And then they use these incredibly powerful transaction monitoring systems to catch those suspicious patterns in real time.
So why does all this matter so much? Well, because this isn't just about protecting one bank here or there. This is about protecting the safety and the integrity of our entire financial system from people who want to exploit it for their own criminal gain.
And this slide really says it all. The whole challenge comes down to this number, 1. That's it. It only takes one single extra layer, the introduction of a TPP, to create a blind spot that can be used to hide incredibly risky and often illegal financial activity. It's such a simple vulnerability, but it has really complex consequences.
So, the takeaway here is pretty clear. This is a constant cat-and-mouse game. As technology and commerce evolve, criminals are always going to be looking for the next loophole. And that's why this constant monitoring and relentless due diligence, well, they aren't just best practices. They are absolutely essential to keeping our digital economy safe for everyone.